Welcome back to Daily DeFi. Today is May 22nd of 2021, Saturday. We see the total value locked in decentralized finance falling while you have to look at the numbers of who is actually buying and who is selling during this market crash. You see a lot of the people who panic sold were retail investors, while institutional investors were buying up and continue to buy up during this dip. Today we'll be discussing some tokens we haven't talked about. So standard tokenized protocol, DFI.Money, so that's YFII. These are some lower cap projects that are actually performing well in the 24-hour time frame, and then linear LINA, while pretty much everything else is down on the daily time frame. If you see that these standard is down about, I would say 7% is kind of the average, that the majority of these are down. You see kind of this similar trend. We're just been a steady falling wedge, which is technically a bullish pattern, but we are in kind of a short-term bear market, especially this weekend. Typically over the weekend, we just see things continue from the kind of trading hours we have during the weekdays. So this is all very important to understand moving into this weekend, and then seeing potentially on Monday if we'll have a sustained kind of mini bear market within this bull market. The other thing I was going to talk about today in another video is a macro overview of this dip, of why these dips are important, kind of zooming back in the past bull run, so like the 2017 bull run, and basically showing, okay, we need these 40 to 50% dips that I've been talking about time and time again. And when people actually see them, they panic. But yet, when you see these gains where you're literally having some projects do like 10x's or 5x's within a matter of weeks, you have to see the volatility on the downside as well. Not everything just goes up. What goes up must come down. So you have to understand this. That's the majority of what we'll talk about today. So those three projects. Look at some of these other top kind of DeFi tokens, and then look at the Bitcoin price drop below 34,000, as well as this Bitcoin pizza with Pomp. So I'm a big fan of Anthony Pompliano. Go give him a follow on Twitter. But first, always with DeFi Pulse, checking in, kind of keeping our fingers on the pulse of the decentralized finance market. So the total value locked in is $56.7 billion, while Maker Dominance 6 sits at 15.28%. DeFi Pulse Index is down crazy. This is a great opportunity, in my opinion, for DeFi Pulse Index, because basically what you're getting is kind of this accumulation of all the different decentralized finance projects into one token, which is the DeFi Pulse Index. Okay, so that's 333.39. Down about 14% on the daily. You can see this massive push down. We've been covering this since, let's see, it was like January when we started this series. So somewhere in this region, So around there, kind of at the beginning of this kind of parabolic move towards the upside, you can see it's just been in this rising, kind of rising wedge pattern, this parabola, and now we're seeing this pullback, this retracement down to that close to like $60 billion level. That's definitely that, and then down here at that $40 billion locked in, that's another kind of significant level of support. But we'll see how far this takes us down. I mean, it'll definitely shake out the weak hands, and then I see a significant move higher, maybe in the next month, maybe in the next week. Nobody knows exactly when we would return back to our highs, but we do need these retracements. We need these pullbacks for the health of the bull market. If everything just goes parabolic, it never has retracements. Well, at some point in time, the bull market's going to end. But when you have these retracements and you kind of confirm these key support levels, then you can have the longevity of a bull market, okay? So especially if you're looking at like super cycle. Now, I'm not one of these people that's thinking that we're going to see a super cycle. I don't really think we're going to hit over 200. I mean, I do think we will hit at least a six-figure BTC, so at least $100,000. I don't think it's going to be 240,000 like a lot of people are thinking. I think that would be the super cycle case, and in that case, obviously I would enjoy the upside risk, but I'm averaging out of this bull run, so I'm taking a balanced approach, and I think that's what the majority of people should do. You shouldn't just be black and white and go, okay, I'm only going to sell when it hits 240,000. Well, then you're going to be the people like in the last bull run where, you keep holding until you think it's going to keep going up. You hold your whole position. You don't average out at all. And then on paper, you have, $1 million in your MetaMask account or in your, Blockfolio account, but then you go to sell and the prices crash. So that's why it's important to average in and average out. This is a perfect averaging in opportunity, in my opinion. Moving on to juicy NFTs. So this is up about 145% at 154,000. Let's see. So CryptoPunks is that top one at 128,000. Again, consistently in the past couple of weeks, what we saw is that daily volume in NFTs was typically closer to, it was around like 1.4 to $2 million dollars transacted daily. So if you just look at literally the volume of all of them, if you just kind of group that together, and then maybe you would have an index of the total. And instead of kind of speculating on one individual project, you could just have the index of the total market, similar to DeFi Pulse, the DeFi Pulse index. And then this is something that Anthony Pompliano is doing, the Bitcoin Pizza, which is pretty cool in my opinion. He basically had this big get together in New York City, which is pretty awesome, all open air and everything. Just specifically to celebrate this, helping local pizzerias, which is really, really cool. So helping local businesses, especially in cities where, they had to shut down. I think that's absolutely awesome. I was in Turkey for 3 months before returning back to the United States for a little bit. I'm just here for about 2 weeks, and then heading over to Tbilisi, Georgia, to be able to see kind of more Ukraine and Armenia, that area. And it's sad because a lot of the businesses in that area really, really hurt, and they don't have a big online presence. So it's cool to see something like this, at least in the United States, where someone's using their kind of following to help the local restaurants, especially in New York City. I mean, some of those just got decimated during this time. They obviously got some supplemental money, but the point is it's great he's helping them out. So price drops below 34,000, pulling altcoins to multi-month lows. So another round of FUD helped push Bitcoin price back above 34,000, placing farther pressure on alts, which now trade below multi-month lows. Okay, so that's very, very important to understand that if these are at multi-month lows, you have this opportunity to potentially get in kind of at this perfect position. Whereas if you've identified a project that has quality fundamentals, what they're doing has a great use case, and they're actually building, they have like a large team, for example. If you don't have these projects identified, well, in a situation like this where you can average in, you can get these kind of buy the dip situations, you won't have that opportunity because you haven't identified them. But let's say you've identified a quality project, you've been tracking it maybe on like CoinGecko or CoinMarketCap, it's been hitting all-time highs, but now we see these crazy pullbacks. This is kind of that opportunity that, you obviously, the idea here is to get in and average in on these positions. That's why I talk about the tiered investment approach, is you never want to just go binary. So you never want to be black and white with how you do these things. Rather, it's ideal that you identify situations like this. You use technical analysis, fundamental analysis, and sentimental analysis. And with technical analysis, what you can do is essentially use Fibonacci retracements, use Fibonacci tools to help you kind of analyze areas where you can average in, and then set a plan, stick with that plan, and kind of remove as much emotion, apply really logic and rationale, so you don't have to worry about whether or not you will have that set up, which in a way you can do this is conditional orders. So you can basically set up conditional orders based on key price levels in the chart. So using something like a Fibonacci retracement, you can identify these significant levels of support and resistance, and essentially use these as kind of pricing measurements, basically, is what you're doing. So for example, in this chart right here with linear, you have this price point right here where you're sitting at around like 4 cents, where it peaked up here, right at what? So that's like a 10x. Or no, that's about a 50x. So, you have 4 cents right here. You're peaking it right around 27 cents. But you see how just a giant wick like that. Since this is a line chart, not a candlestick chart, you can't really see it that well. The point is you don't want to be FOMOing in at that point. This is a great point to get in, because look, I mean, for example, this project is, I'm just using it as an example because it's doing well on the daily. It's up about 28% while everything else is down. You can see over here, as I kind of talked about in the beginning, but with linear, you have these levels down here where it's retracing back to these kind of all-time lows. And it's like, that's the perfect opportunity to get in, whereas most people, again, are FOMOing in at that point. So moving on to DFI.Money, ticker symbol YFII, again, not financial advice, don't know this project. There's a lot of projects that are higher market cap that are doing similar things, but these are basically carving out their individual niche. You have to do your own research on a project like this. That's why I have that video, How to DYOR, in the description. So this is at $1,711, up about 9. Wow, that's volatile. So up about 9% on the daily. Let's see. So 30% up on volume at 103 million on the daily, whereas circulating supply is verified by CoinMarketCap, which is 38,596 YFII. So it's not YFI, it's YFII. So, YFII, Year in Finance, is a completely different project. But if we look at this all chart, it's basically at all-time lows. This all-time low was at 121, and now it's sitting at, it's close to all-time lows. It kind of peaked up here around 8,000. Yeah. Oh, wow. 9,000. It was the all-time high. And that was in September of 2020 that it popped off. Remember, that was when like the decentralized finance market was really going crazy. That was kind of the first initial wave of a lot of those projects that were innovating in the DeFi space, basically replacing a lot of what traditional finance has done. And this is one of those projects that did that, but it's retraced significantly down. So if you've done your research, if you analyze that project and see it has value, like if you're value investing and you see, okay, this project has a real use case, can actually help people, in emerging markets. That's a lot of what decentralized finance is all about, is taking these systems essentially that are in Western countries and allowing anyone to access them around the world. So that's a lot of what I do. For example, in Turkey, they have a lot of people are unbanked. So they have zero bank. They're only holding Turkish lira. And when you see the inflation in the Turkish lira, like has happened, you get this situation where you want to hold your assets, at least in something like a stablecoin like USDT, and then hold it in your own wallet, so you don't have this counterparty risk or a political risk with a country. Rather, you can literally just hold it in your own private wallet that you own, nobody else can control. And that's kind of what some of these projects are all about. Now, not all of them, clearly. Some of them are more quality than others. Some of them you definitely need to dig into further. So always do your own research. So standardized tokenization protocol, so STPT. You see this kind of dip right here. It hasn't retraced that far. So, for example, like this project is a social standard tokenization, price estimate. So, this aims to build a decentralized network designed to facilitate the discovery of usage of digital assets across global communities. Yeah, so something like this, for example, when you're talking about tokenized standards, which is basically what this is. So it's standard tokenized protocol, STPT. Something like this, it's using all the blockchains. So it would be like a global tax, for example. So every country has their own different financial systems. They have their own taxation. They have their own business laws. They have their own investing laws. But if you set like a global standard, for some example, something like the United Nations, that's similar to what this is doing, except with blockchains. You can think of each different blockchains. You could think of Ethereum, Solana, you could think of Polkadot, you could think of Cardano, you could think of all these different blockchains out there. And then go, okay, wait a second, let's have a standard for all of them. So instead of the ERC20 standard just for in the vacuum, the Ethereum network, you have kind of some set ground rules. So interesting idea. I obviously some people will go against it, but that's pretty much all for this one. So if you enjoyed it, you know what to do, like, subscribe button, all, invest global, and until next time.